Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the flat structures where we're looking for a 3-wave corrective structure in a wave A, 3-wave corrective structure in a wave B, and then a 5-wave impulsive structure to the downside in a wave C, where we want to see the low of this wave A taken. You see two colors on my chart, orange and green, and the green color represents an expanding flat, which is the most common flat pattern, where wave B has a target area between the 1.236 and the 1.38, 76.9k to 78.8k, taken from the high to the low of this wave A, and the target area for your wave C is in the green box here, 56.7k to 50.2k. The orange count is a regular flat, and a regular flat is an uncommon flat structure where the target area for your wave B is between the 0.9 and the 105 Fibonacci, taken from the high to the low of A, and the target area for your wave C is between the 1 and the 1.236 trend-based fib extension, taken from these pivots, which is also below wave A and gives you a target between 59.7k and 56.6k. Now inside this wave B of an expanding flat, we would be looking for a wave W, X, Y double zigzag. So we have an A, B, C to the upside, 3-wave corrective structure, and another wave A, B, and a wave C towards the upside. Therefore, the invalidation for an expanding flat is price moving towards the downside here and taking the low at 64.5k. If a regular flat wave B is finished, we are looking for an impulsive structure to the downside in a wave 1, 2, and then a very big wave 3 towards the downside, invalidating an expanding flat by moving below 64.5k. It does mean that we want to see strong continuation, because the usual minimum target for wave 3, which is the 1.618 trend-based fib extension, taken from the high to the low to the high over here, is below the 64.5k level. Now we also know that the weekend is coming up, and the weekend most commonly is a ranging structure. So if price is not going to take this low before the weekend, it does increase the probabilities for the more bullish scenario, where we then expect an expanding flat wave B, or we expect this scenario over here. So this is the bullish scenario, where we either look for a wave 1, 2, and then a big wave 3 towards the upside, or a wave A, B, C, which is what we want to see, an expanding flat, and then a move towards the downside afterwards. Now in this scenario, the common target area for your wave 2 is in the blue box, the golden pocket to the 786, taken from the low to the high of wave 1. The common target for your wave B is between the golden pocket and the 886, while the 886 is a rare target for a wave 2. The low over here was made before the 0.382 fib time, and that is important because it is actually quite uncommon for a wave 2 or B to finish a corrective structure before the 0.382 fib time, taken from the low to the high of this wave 1. Now that price over here made a new low after the 0.382, it usually would work better for a wave 2 or B, but of course we want to see proof of support locally, as at the moment price is falling and volume is increasing, as you can see. And if this is a nice impulsive structure to the downside, what we are waiting for is a wave 4. So we want to see a 1, 2, 3, 4, and eventually a wave 5, meaning we want to see a sideways range, then one more dip in a wave 5, and then continuation to the upside. A Fibonacci level that is good to have on your chart is the 0.618, because the 0.618 is an invalidation for a wave 4. So if price is going to do this over here and then move towards the upside, hitting the 0.618, sitting at 69.6k, it reduces the probabilities of an impulsive structure. The 236 to the 05 is the common target area for a wave 4 and a potential 1, 2, 3, 4, 5, and then you look for continuation to the upside in this particular scenario. But again, the weekend is coming up, and the weekend is quite famous for its sideways ranging structures. Talking about a range, we have this big range over here, which is nicely respected. Value area low, value area high, point of control for support, moving to the upside, and now we are back at the point of control. An important support resistance area is this white box in the middle over here. You can see it's played a big role in this range, and now it might play a big role once again. It acted as support over here on the 4-hour chart, but currently we are below this point of control, as you can see. So let's see and wait how this 4-hour candle is going to close and how price is going to react in this area. The point of control again acting as a little bit of support, and we also wicked this low, but by losing the point of control we do increase probabilities to move to the value area low, which is sitting at 64.8k. The probabilities generally, however, on the higher time frames are higher to take this high sooner or later after this range is finished. We touched the 886, and the 886 is a very rare target for a wave 2, common target for a wave B or a wave X. Increasing the probabilities, any move to the downside is a wave C or a wave Y, which in turn increases the probabilities for price to move back towards the upside sooner or later and take this high over here to continue the trend. When we look at these CVD divergences, then we had some bearish CVD divergences earlier today. The first one over here wasn't that interesting. The bearish CVD divergences mainly became interesting when the second one was visible, lower high on price, higher high on the CVD, which is what you can see over here on the 15-minute chart. Lower high on price, but if you look at my cursor, higher high on yellow on the right side, as well as on blue, higher high here on the right side. Bearish CVD divergence, lower high on price, higher high on the CVD, and also here, more locally, the smaller bearish CVD divergence on the blue line, lower high on price, but on blue a higher high, as you can see over here. Bearish CVD divergences, there is absorption of market longs with limit short positions, increasing the probabilities for price to move towards the downside. Now these CVD divergences have already played out, and now we have to wait and see again locally if we do build a little bit of a range, and then we can reassess these CVD divergences. And if we then look at the probabilities of the different scenarios, then for any of the bullish scenarios, bullish meaning taking the high over here before any of these lows, so for any of the bullish scenarios to increase in probabilities again, we first need to see local proof of support. This starts with waiting for a range to form in a local wave 4 over here, and then see one more move to the downside in a wave 5 to finish an impulse to the downside over here for either a potential ABC, which is a bullish scenario, because then we expect price to move towards the upside if it can't take this low. But in the bearish scenario, we want to see a wave 1, 2 and a wave 3 towards the downside, preferably price taking this low before the weekend. As long as price goes down in a straight line with volume increasing, we simply have to wait for a range. That is the easiest explanation from an Elliott Wave point of view. Wait for a range to form, as the range will give us all the information we need. The weekend is coming up, however, which tends to be a ranging structure. If price does not take the low here at 64k before the weekend range starts, it does increase the probabilities for the bullish scenarios where we take this high before the low. However, at the moment, all we did locally is losing some support levels like the target box, like the golden bucket as mentioned during the live stream as well, which then increases probabilities to take this low, which we have done now, right? We have a little bit of support to the downside still besides the golden pocket where we are right now, right? We have the daily naked point of control and the range point of control, but these are single levels, so we have to be careful and see how price reacts at these levels, right? We have a little bit of support at least. However, probabilities over here locally are towards the downside unless proven otherwise. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.